here, Ryan Buckholdt, local lender here with CrossCountry Mortgage. Absolutely wonderful lender and a great source of knowledge. So November's median sale price just came out, and even with the, pretty dramatic rise in interest rates, we're not necessarily seeing such dramatic drop in pricing. So Ryan, I was hoping that we could kind of touch on some of the creative solutions for buyers that are still in the market looking to buy a home, but are, affected with their purchasing power. So we talked about a few of those options. Again, how about you tell us some of those options that we were discussing, temporary, permanent, and then some other loan programs. Could you touch on some?
Yeah, definitely. Just over the last week or two, we have actually seen interest rates kind of turn the corner, and we're starting to see them come down a little bit. So that's a good news relief that we're seeing interest rates come in a little bit better than what they were before. Some of the different programs we're using are permanent buy downs versus temporary buy downs. Right. And what those basically mean is a seller credit in order to buy down the interest rate to help the payment be more affordable for home buyers. So on a permanent buy down, I actually ran one scenario this morning for a buyer where he was looking at it going in on an $850-ish purchase price with about 5% down. With taxes, insurance, everything, his payment came out to about $6,800 at the $850 purchase price. So we basically reran the numbers and went to a $900 purchase price with a $50,000 credit to buy down the interest rate. It brought it down by about $700 per month.
Wow. Oh,
so even though the purchase price was going up, their actually payment was $700 a month lower than the higher interest rate without the buy down. So it bought a 30-year fixed buy down to about 5% on an interest rate. So we could still say that 5% interest rate still exists with the help from the seller in order to buy that down.
And so are you seeing that more often right now where buyers are able to negotiate themselves situations like this?
Definitely. We're seeing it happen more and more. A year ago, this wouldn't have been able to happen at all. It was basically, like, the market back then was no contingencies and go all in and just risk everything. Today's market is not like that. Today's market is sellers are willing to cooperate. It's more of a buyer's market to where they're getting some things that they request taken care of. So it's a much healthier market for buyers today.
Right. Okay, so that was the permanent solution. Can you talk to me about the temporary solutions that we were discussing?
Yeah, so basically it's called a 3-2-1 buy down or a 2-1 buy down. Okay. And basically what we're doing with the monies that the seller would credit for a concession is they will actually put that into an escrow account and help subsidize the payment so that the buyer has a lower payment in year number 1, 2, and 3. Wow. So basically it could subsidize it. I've seen them anywhere from $1,200 to $1,500 more per month that the seller can subsidize.
Wow.
The benefit of that is the buyer gets to walk in with a much lower payment in year number 1, and then 2 and 3. It gradually goes up in year number 2 and 3, and then it becomes fixed from there on out at the one payment from year 4 through 30. So the 3-2-1 refers to the lower interest rate in year number 1, 2, and 3.
Wow, that is incredible. And so is this something that's more recent, something that you're seeing happen a little bit more recently? Have you done many of these? I mean, it seems like such a wonderful tool and creative solution for buyers right now.
Yeah, so 3-2-1 and 2-1 buy downs have been in existence ever since I started in the business 20 something years ago. However, it's different markets that allow it because, again, the market a year ago, the seller never would have paid for something like that. But today, they definitely are paying for stuff to get their house sold. So yes, it's something that I'm seeing more frequently. It's really, the buyer being able to look at it and see what makes more sense for their family, their situation, their payments. Does the permanent buy down, which might be a little bit higher payment, or is it the temporary buy down really help them the most?
So can you touch on that maybe, what the pros and cons and the different scenarios where one may be more impactful than the other and why they may fit different situations differently?
Yeah, definitely. So the permanent buy down will allow somebody to qualify for more because we are qualifying on that lower interest rate. So the permanent buy down is basically forever. So They get into a 30-year fixed, that payment's going to stay at that amount for 30 years.
Mm-hmm.
Like I had said, about $700 in that example that I talked about earlier was the reduction in payment for them. So it's a greater savings on the temporary buy down for the first couple of years than there is on the permanent buy down in the scenarios that I ran. One of the major benefits on the temporary buy down is that money that I talked about putting into that reserve account
Mm-hmm.
from the seller, that if the buyer refinances, they actually get that money back to help pay for the refinance in year number 2, 3, or 4.
Wow.
So whatever money's left over, they can get that money back. On the permanent buy down, once that money's spent, doesn't matter what they do in the future, they don't get any of that money back.
And so you said that's held in an escrow account?
It's held in an escrow account, correct.
Wow, okay.
The other benefit on that temporary buy down is if I'm competing or somebody's looking at a 5-year fixed and then turns adjustable, I like this temporary buy down better because you know exactly what's going to happen in year number 5, 6, 7. Whereas in the 5-year fixed example or 5-year fixed arm, you don't really know what's going to happen. It's depending on what interest rates are at that future time. So I kind of like the 3-2-1 buy down strategy better than going to a 5-year fixed type transaction.
Right, right. Okay, so how about we talked about permanent, temporary, but then there's also other loan programs which aren't necessarily the first thing that, you know, a first-time home buyer is going to think about. So what are some other loan programs that maybe their minds don't initially go to that may be something for them to consider?
Yeah, so like I talked about the 5-year fix, so they offer that in a 5-year, 7-year, or 10-year. What that means is it's fixed for that 5 years or the 7-year or 10-year. They're fixed for that period of time, but then after that, it goes adjustable. So for some people who are like, you know what, I think I'm going to live in this house 2 or 3 years and then sell it and buy the next one, then that program is specifically for them. If you have somebody who is going to buy the house and then want to pull cash out to remodel it, then that type of program is definitely for them. So those definitely work great. You know, 5 years, 7 years, 10 years. 10 years is a long time. They say the average loan lasts 2.5, 3 years that actually somebody keeps on the property. That's average. So somebody is most likely going to refinance to pull cash out, send kids to college, you know, do whatever it is, sell the property. So whatever it may be, most likely they're not going to stay in a loan for the full 30 years. So those are great tools for keeping the payment down and being able to buy in today's market.
Another factor here is where rates are now and where they're going to go. So can I ask you if you have a crystal ball and have any opinions as to where we're at now and where you anticipate things kind of to be next year?
No, I do not have a crystal ball. However, the reading from the government definitely shows that we're going to see interest rates lower in the future is what basically all the economists that I listen to. Basically right now, government is purposely pushing us into recession. They're trying to slow down the dollar and have people spend less. When history has shown when we go into recession, interest rates do come down. Prices stabilize because home prices stabilize because now interest rates are down. So now more people can afford to buy that home. So when more people can afford it, prices stabilize.
And then we go through this whole cycle all over again because it's just such a fun ride.
Yeah, exactly.
Okay.
One other thing to note just a couple days ago is Fannie Mae has now increased the loan amounts here in Santa Cruz, all over the country. So they increased the loan amount from $970,000 here in Santa Cruz to $1,089,300. What that basically means is you can get into a house with 5% down up to a 1,150 purchase price about. Wow. So that's pretty huge for people who don't have the down payment, you know, maybe starting out in professional careers who don't have the down payment yet, but have a great monthly income. That's definitely something that's going to be able to help them out because, you know, prices here are about that 1,150 with 5% down is a great tool to get into a property here in Santa Cruz.
And, you know, we were talking about the market that it was previously, you know, the beginning of the year or last year, where it was highly competitive and people were dealing with, you know, trying to make their offer as appealing as possible, even getting, competing offers that had no contingencies, even if they had loans. So would you say now that it's more of an opportunity for people that have lower down payment amounts where they're not competing with such competitive offers being written with higher down payment amounts or no contingencies or all cash? Would you say that you're seeing more of those loans go through, get their offer accepted that have lower down payment amounts?
Definitely. There's a lot more offers that are being accepted with finance contingencies, with lower down payments, with seller credits. Just it's a lot different market, and it's swung towards the buyer's market than we were before. So again, great market.
Right. I think that it's offering more options for buyers, even though that prices aren't dropping as dramatically. It seems like their offers are much more creative, and more of these creative offers are getting accepted because they're more of win-wins. I was doing our market update today for the month of November, and our median sale price was 1.24, and our inventory was 3 months, and we haven't seen that for a very long time. So what that means for buyers is there's more options to choose from, meaning the offers that you're writing, it's likely that you're not going to be competing with as many people, which I think is important for buyers to know. They have these tools at their fingertips to really make their home purchase really beneficial for them, to really set them up in a nice win-win situation. So if buyers have questions about their options and these different creative solutions, what's the best way for somebody to get a hold of you?
Yeah, so best is going to be phone number 831-818-2339. We can take a 5-10 minute phone conversation, and by the end of that conversation, I'll pretty much be able to tell you where exactly what a lender is going to lend you and what you can and can't do. Again, it's a no cost consultation, so it doesn't hurt just to pick up the phone and call to see where you're at.
Great. Okay, so I'm Kaelin Wagnermarsh as well. So if you have any questions about the real estate market, real estate trends, or strategies, give me a call. My number is 831-419-6538. I'd be happy to chat. And thanks so much, Ryan, for all of your information. I can't tell you how much I really appreciate it and how helpful this information is to buyers who are looking to purchase right now.
Yeah, definitely. Thanks for having me on.